Max Money Tribe, Max Money Family. What's going on? It's your boy Alvin, and today's video is full of knowledge. Today we will be learning, family. First things first, shout out to everybody that smashed the subscribe button, crushed the thumbs up. We flew past 500 tribe members. We are now on our way to 600, and I want to thank every single one of you, man. It's great having y'all on this channel. I appreciate the input, the feedback, the challenging of the knowledge, man. It's great. Every single question is a good question. So family, let's get into it. This video is jam-packed with options. I have several members that have reached out about how do they buy options? Where can you buy options? How do you unlock options? What do I look for when buying options? So all that's in this video. Now remember, this is for entertainment purposes only. I am not your financial advisor. So let's get into it. We're going to go down. I love SPY options. That's basically the market, the SPY ETF. But right now I'm currently holding a Lucid call. So I'll show you these. Lucid is sitting at $43.81. You will have to go to your settings on Robinhood, go down through your settings, under the investment tabs, find options and unlock them. Agree to the terms. Options are very risky. Very risky. So they want you to agree to the risk. Now, you might not even have that option because of how you answered the questions on Robinhood. As far as your income goes, your risk level, you might have to go back and modify those answers. I done heard some people say that worked for them. It opened up the options. The higher amount of money, the more risk you're willing to take. It makes it seem like it's not a big deal to you. So if that interests you, continue on with this video. So hit trade at the bottom of whatever stock you're on. So as you see, I'm on Lucid. If I click on charge point, it'll say trade options, buy the stock. So I'm gonna go back to Lucid down here at the bottom right, trade options. Now, keeping it simple, there's calls and puts. A call is when the market is going up, the stock is going to go up. There's a catalyst, you think it's going to go up. A put, bad news, the stock is coming down. Some CEO is selling all their shares, stock going down, buy puts, right? Simple as that, up and down movement. Now, all these dates at the top are expiration dates. Usually you want to go a little further out, about 2 weeks, a week is good, depending on your risk level. So I'm just clicking on a week out. Usually options are going to expire on a Friday. Now, as we see in the middle of this, it's the price, $43.81. At the top, red, you have buy and sell. We're focusing on buying calls, buying puts, buying calls, buying puts. And as you do that, you will have different numbers over here on the right-hand side, guys. Now, the share price is in the middle. Now, the numbers above the share price, 44, 45, and so on, 46, they are considered out of the money, out of the money calls right now. The numbers below 43, 42, so on, they're considered in the money. They have a greater chance at profit, also with a higher value. I like to go a slight bit out of it depending on the stock, or if I read the charts and I believe that that number is a nice resistance number, that it will run up to that number fairly easy or within good reason. So as you see, I bought a $45 call. Now you see the numbers on the right hand side. $2.64, $3.03. Those are actually hundreds of dollars. $2.64 is actually $264 to buy that one contract. Okay, I'm gonna get into that in just a sec. Now you have a break even number, as you see on the $45 call. That's the one we're focusing on. Check right there. Break even, $47.64. That means if you want to buy 100 or whatever many contracts you order, you will need that much money that they are worth to execute this trade. The $47.64 is the price that the stock has to finish above come expiration of November 19th. So when November 19th at the close of the market, this stock has to be above. If it's $47.50, the option will expire worthless. $0. All your 264 is gone. If it's above it, great. Now here's the most important thing, or one of the important things. We are not worried about the break-even price at all. Never. You want to get in and out of options most of the time. We're not looking to buy a whole bunch of them. We're not looking at any of that. Buy, we click on the stock, 264, family. Check it out. Now, at the bottom, you're probably wondering, how much can I lose? At most you can lose is $264 with buying this call here. The most you can lose is what you put into an option. The most profit you can make is unlimited. If the stock were to run up to $1,000, you would be rich. If the stock were to go up to $100, you would have tons of money. So gains are unlimited. As you see here, unlimited. It just keeps going. The loss is only what you put in. Next thing I'm focusing on, limit price. You hit the drop down button, family. You want to go down to the bottom, right above the Greeks. So if I'm just glancing at this option, do I want to buy it? What am I looking for? Volume and open interest. I'm going to tell you right now, family, listen up. Let me have your ears. You don't want that volume at 100. Right now, you see the volume, 18,960. Open interest, 10,380. Open interest is how many people actually have that contract and it is still liquid. They haven't executed that contract. They haven't sold them. They still hold them. There's 10,380 of them out there. The volume is how many have moved around. 18,960. So basically, even if you didn't know those numbers, you want the open interest to be fairly large and the volume to be fairly large, especially if you're just now getting into options. So 1,000 open interest, 1,000 volume, pretty good. Now, next thing you want to focus on, or what I focus on, is delta and theta. Delta 0.4814. You see that 0.48. Theta is 0.32. You usually want your delta higher than your theta. Delta to me means for every dollar the stock moves up. So it's at what we say $43.64. If it were to go up $1, $44, then your call option would go up $48. For every dollar the stock goes up, the call option will go up just about that much. But the theta is the time decay. It takes away from that value. So it's not necessarily a solid $48 for every dollar. It's a little bit less because theta is eaten away. And over time, theta, as you get closer to expiration, theta gets larger and larger and larger, and it eats away more, and your delta will get lower. So you will need a drastic move in the stock to actually get that value out of it. Now, implied volatility, 154% right here at the top right, 154%. That means this is a very volatile stock. Big ups, big downs. That means that the more it moves, you will make money quicker. You will also lose money quicker. But Lucid is a fairly good mover, which will give you a chance at profit. So you literally could swing trade these, day trade these, jumping at the bottom, jump out. So if you saw on Mines, I'll zoom back out. I'll go to Mines real quick. My call option on Lucid, we're in the same one, $45 call. I'm already up $25. I bought this towards the end of the market right here, as you see. I bought this right here, open, right there at 2:05 on Friday. It was already up. I could sell this right now and have 25, or not right now. When the market opens, I could sell this and have $25 in my portfolio. But you have to have an open interest of people that have the actual stock and the volume, or people that really want to buy the stock. That's how you can look at it. So the volume is up there. People want it. You can sell it to them. If the volume is 1 or 0, it could be up 1,000. There's nobody to sell it to if it's 0. So you want to make sure you got volume and open interest. Things I look for when buying a call option. If you have any questions, please reach out. But please, if I helped you, smash that subscribe button, crush the thumbs up. I'm not done yet, but those would help. So I want to show you the SPY. It's a little bit different. So you go to trade options. Say you get some good news like unemployment is down. a million jobs are created. The stock market is going to go crazy. So you want to buy a call. You jump in, you see right here, these are a little bit cheaper. Now the SPY is great because they have low costing options. At the same time, they expire quicker. The expirations are Monday, Wednesdays, Fridays. So you have to be careful. You can even buy call options on the same day. I do not advise that at all. That is super risky. Don't do that at all, family, until you understand them. So check it out. 470 is a solid number. The SPY could jump up there tomorrow. So you click on it, you go long, you say, I want one of them, $23. Nah, matter of fact, I want 100 of them, 2,300. You see how that works, family? So guess what? I'll buy 100 sometimes. I do. I can buy 100. When it goes up to $25, check it out. Goes up to $25. Now it's worth $2,500. I made $200. I'm out of there. I sold it. I'm not waiting for expiration. I'm not waiting for break even. I don't care. If it goes up and I see this number goes up and that's what I have a day trade, I will sell it that same day. If it's the next day, I will sell it that next day. You don't want to hold options for too long overnight in the SPY because news could come out and it also could crash down. Imagine if you woke up and the SPY jumped down to 460. Those call options are pretty much useless. It will show $1. It will show 0.01 beside them. And you might not have any volume on them. So now you have $100, yes, but nobody to sell it to, right? So that is hard. And sometimes the stock is dropping out so much, it might be at 5, but you might have to sell it for a cent or a dollar less at 4 just to get rid of them in time. So you lost $100 that quick because they won't execute all the way through if there's not a lot of buyers. So you have to drop your price. Now, if you clicked on one of these, say the 23 one again, it'll tell you the last trade was $29. There's a bid for 22, ask of 24. It has all those breakdowns at the top. It's showing you the green. There's more people that want to buy it than sell it. So there's a lot of stuff. But if you come down here and look at the delta on the SPY, on this call, the 470, it's further out, has less volatile, chance of profit, 14%, which is fairly low, so not good odds. But the delta is 16 and the theta is 40. So as you see, this is already going to expire on Monday. So therefore, it's a lot of risk. It's not worth it to buy this one. This would not be a great one to buy because it's expiring the same day if you were to buy it. Now, if you go a little further out, say, okay, I want to go out to November 22nd on the SPY. Now those same ones, that same $70 one is 165. Now let's check it. The volume is 2,000. The open interest is 3,000. I like those numbers. Chance of profit is over 25%. I like those odds. Delta is 0.35. Okay. What's my theta? 0.16. Okay. That's about half. I'm looking good there. Volatility, 10%. I like those numbers. So you get what I'm saying, family. You want to check those key numbers. And if you want to risk a little bit just to learn, this is how I like to learn. It's kind of like hands-on. So I will go November 17th. And I would go a little bit further out. Probably like, you can click like 475. Remember, the stock does not have to reach that number. It just has to move in that direction pretty good. So you would put like $5 on this or $10. You buy one, it costs you $10. It's a $10 risk to learn a valuable lesson, family. I think that is very, very much worth it. So that's how you could learn with this. And when it moves up $1, you can sell it, make you $1 and be happy for the day. But it's so far out, you might want to come a little bit closer. So that's how I would do my options. Those are the things I look for with options, family. Hopefully I helped you out by learning some options today. I appreciate every single one of you again for sticking with me. I'll see you tomorrow.